Hey everyone, so today I want to share a trading strategy that has worked really well for me and has for a long time. If you've been struggling to find a solid, consistent strategy in day trading, I get it, it can be overwhelming, but I've got something pretty simple that's been giving me a solid 75% win rate, and honestly I think you'll be able to pick it up quickly too. I use just 3 tools on TradingView to find my trades: Fibonacci Retracements, the MACD, and a simple trend line. That's it, and I'm using this all in a 2-minute time frame. It's a strategy that keeps things pretty straightforward, and the best part is it works. So let's break it down together and I'll walk you through exactly how I use each of these indicators to spot high probability setups. First things first, log into TradingView. If you don't have it, you can sign up by clicking the link in the description below. But if you prefer other charting software like Thinkorswim, using this strategy will certainly work there too. But for the purpose of this video, we're going to use TradingView. So once you have that pulled up, we're going to create the settings I personally use for the Fibonacci retracement. If you've never used Fibonacci before, don't worry, it's pretty simple. I use it to identify key support and resistance levels where price might reverse or consolidate. It's a very powerful and reliable tool. Just hover over to the left and click on this icon and then click on Fib Retracement. Once that feature is selected, go ahead and drag it out by clicking once and then a second time in another area. Then right click on any one of the lines and go to Settings. My settings are already obviously created, so take a second to pause the video and input these numbers into your settings as well. But make sure it's just these numbers and nothing else. Also make sure extend lines to the right is selected. So once that's done, just push OK and it'll be saved whenever you're ready to use your fib levels. So let me quickly explain this for those not familiar with fib levels. The whole point of a Fibonacci retracement is to draw one from a swing low to a swing high, meaning this area of the fib tool you first click on will be the low of a certain pattern, and then you're basically dragging it to the current high, which is this area. And this will make more sense once I actually show you an example, but once you have your Fibonacci retracement drawn out, it helps you identify support where a security will bounce off of. And the 50% and 61.8% levels, which are these two lines right here, they're basically considered the golden levels of support, meaning this is where price is most likely to reverse, with the 38.2% and 78.6% levels right here being occasional levels of reversal. And once price reverses, our price target is this negative 23.6% level, which is this blue line. Sometimes when a security is very strong, it can reach this pink negative 61.8% level as well. And that's pretty much it. Fibonacci retracements help you identify support and a price target for you to aim for. And vice versa, when you're shorting instead of going long, you simply just flip it. So instead of a swing low to a swing high, let me just remove this. And get another one. So yeah, you just go from a swing high to a swing low. And so the strategy is just the inverse of going long. I hope that makes sense, and it will once we do our example. Let me go ahead and remove this. Next thing, we're going to set up our MACD indicator. You simply hover over to the indicators at the top left and just type in MACD in the search bar. And it'll be the first result, so just click that. So using the MACD in conjunction with a Fibonacci retracement is a very powerful combination and produces excellent trading results. For the MACD, you're simply waiting for the line to cross or when you think it's about to cross, because that's an indication of a price reversal. And I'll show you what I mean when we get to our example. Now just make sure you're on the 2-minute time frame, and that's pretty much it as far as setup. The trend line is going to be at the top left, but I'll let you know at what point we use that during our trading. So I mostly trade when the market opens, but I wait about 10 to 15 minutes or so after the bell to find my setup. So the chart you're currently looking at right now is the NQ. I trade NASDAQ futures and these tools work very well with it. So this candlestick right here was the 9:30 bell, and around 9:38, that's when I noticed price started to reverse a little. So I look for the most recent swing high, which is this area right here. I grab my Fibonacci retracement and I drew it out from this high to this low. Now you can see price ran past our golden levels of support, so now I'm thinking this could be a long play, and I would simply draw another fib from this low to this high. However, price did close just below this 78.6% level, so I continued to just watch it. I let it consolidate a little until the MACD was bearishly ready to cross, and after more consolidation, this is where the trend line came into play as well. I use a trend line when I can find clear touch points to draw from, especially if it's 3 touch points like these right here. 1, 2, 3. So let me just draw that out. Okay, so now we have our trend line. I always wait to take a trade once a new candlestick opens below that candlestick if I'm going short, or above that trend line if I'm going long. So in this case, I'm going short. And once I saw this candlestick right here close below this trend line, I knew the next candlestick was my entry. However, before I did that, I needed to check the MACD. Did the line cross? It did. So now we have price bouncing off a fib level. We have price breaking this trend line, and we have price telling us the MACD has crossed bearishly. All strong indicators used in confluence to take our short with conviction. So again, my entry would be this candlestick once I get confirmation of the close of the prior candlestick breaking below the trend line. When we make our entry, our priority should be establishing a stop loss right away, because day trading successfully is all about proper risk management. Our stop loss would be above the high of this candle right here. And our price target is going to be the negative 23.6% retracement, which is this blue line. And you can see the trade eventually got there and it worked out beautifully. All because we got confirmation from 3 of our indicators: the Fibonacci retracement, the MACD crossover, and the break and close of the trend line. Now an argument could be made, well, why didn't you go long here when price pulled back? How did I know in real time it was going to go down? Well, let's get rid of these indicators for a second. And let's go to our Fibonacci retracement and draw out a bullish retracement from this low to this high. Alright, so let's ignore these later candlesticks and pretend like we're focusing on this area in real time, so we don't know which direction it's going to go. So I did indeed see price reversed around these golden levels we alluded to earlier, so that may look promising, but it's still not enough confirmation for a long position. Next thing, we take our trend line and draw it out from this touch point to this touch point. Now you can see this candlestick right here broke above this candlestick, but you can also see the body close just below it. So we would simply wait for a candlestick to close above it to take a long position, but this already isn't a good sign. Next, you can see the MACD is starting to cross over, another bearish sign. So the fact this trade only met 1 criteria out of the 3, and you need all 3 to take the trade: bounce off a Fibonacci level, a break and close above a trend line, and the bullish MACD line to stay above the bearish one, I knew this wasn't a good trade to take. Whereas with our example prior to this, it met all 3. A bounce off a fib level, a break and close below the trend line, and a bearish MACD crossover. The short trade was ideal. And you can use this strategy with any trading instrument, whether it be for stocks, forex, or futures, but it works very well with futures. So there you have it. This is a strategy that I've been using consistently to achieve a 75% win rate. It's all about waiting for the market to give you the right signals and not forcing trades. By combining Fibonacci, the MACD, and a trend line, you can easily identify high probability setups and make informed, confident trades. I know this works because I've been using it day in and day out, and if you stick with it, it will work for you too. It's simple, it's powerful, and it's effective. If you found this helpful, give this video a thumbs up and don't forget to subscribe for more strategies and tips. If you have any questions, drop them in the comments. I'd be happy to help you out. Thanks for watching, and I'll catch you guys in the next one.